Hi, welcome to the Trader's Clock. You're probably anxious to get started, so let's dive straight into the basic steps necessary to start evaluating the markets. The first time you come into the application, you're going to have to agree to the terms and conditions in order to use the application. You'll only need to do this once. You'll do this by clicking on the I accept button here. That will lead you to the hypothetical risk disclosure that you must also click on and agree to. This you'll see every time you come into the application. Click the I understand and you will be brought to the next screen, which is the parameter screen. There are only two screens within the Trader's Clock application, the parameter screen and the results screen. What is a result? A result is a test of entering the market at a certain beginning time and a certain ending time, and doing that every day for the number of look-back days that were chosen. So this particular result, starting at 9:35 to 10:30, examines if you got into the market at 9:35 and got out at 10:30 every day for the past 14 days, what would the result have been? In this case, it shows the total number of P&L, the accuracy of that, and the average per day that was generated with that individual test. Now, since 960 of those were run, we're only displaying the top 20. That's why they are shown here, and from the best at the top to the worst at the bottom. Let's talk about the parameter screen. The different parameters seen here affect how the results are displayed and what they're calculated upon. The first one is the market. Not too much to explain here other than that the fact is that we have futures markets as well as FX markets, and depending on your subscription, you'll either display all of them or just futures or just Forex. The trial displays all of them. Let's go ahead and select a market. In this case, I'm going to just choose crude oil for now. And what you have here next is the results. This is the number of results that will be displayed on the chart. It's set at 20. Let's just hit plot it, and what that'll do is just show us that we have 20 results being displayed. Okay, so I'm going to go back and I'm just going to make a quick change here and change this to 10 results so that we can see what it looks like and how that affects what's being displayed on the screen. As you can see, now we're only listing 10 results. Go back here, and that's how they show, so that reflects what is being displayed, the number of results that are being displayed on a chart. I like 20, gives me a good overall picture of what's being displayed. Let's talk about accuracy now. Accuracy is a filter. It represents the cutoff point for results to be displayed. So if our results do not have an accuracy of 65% or greater, they're not going to be displayed. In this case, 65%, yeah, it's about 2/3 of your results are positive or have positive results, and that's where I like my numbers to be displayed from that point forward here. So I'm going to hit plot so we can see where the filter is coming into play. So in this case, you can see it's based on this column right here, that percent column. That's the accuracy column. You can always look back to the top here and show that the accuracy filter is being set at greater than or equal to 65. Let me just go back here real quick and change this to 75. It's not going to affect actually what's being displayed because all of our results had greater than 75% accuracy there. So as you can see, we've changed it up here at the top. Accuracy is greater than or equal to 75. That is a filter, and so that affects the number of results that will be displayed as long as they meet the criteria of being greater, in this case 75% or greater. The next thing we have is our ranking. Okay, you can either rank by accuracy or rank by profitability. Each one of these tests is based upon a back test, looking at a certain period of time and determining if you got in at one point, got out at the next point, what is the profitability of that particular test. The way we display that is by ranking it. Okay, so if I hit the plot button, you can see that we are ranked by accuracy. It tells us rank by accuracy here. That means that we're going to be sorting by this column and then secondarily by this secondary column here, which is the total P&L. Let me go back here. What do you want to display? Both buys and sells, buys only or sells only. Okay, as you noticed on the chart there, there's red and blue bars. Red represents sells, blue represents buys. If you want to chart and look for both buys and sells, you choose the first option here. Only buys or only sells can also be selected. So if I only choose buys, when I plot it here, we're only going to see blue bars on our chart here. We're not going to see any of the potential searches for red bars, which would represent potential selling opportunities. The time parameter allows us to specify what periods of time we're going to be searching for. This is defaulted to show all periods of time from 5 minutes to 60 minutes. That means that when it says less than or equal to here, less than or equal to 60, we're going to be searching for and analyzing everything from 5 minutes, 10 minutes, 15 minutes, 20 minutes, 30 minutes, all the way up to 60 minutes in length. Okay, that's the greatest search possible that you can do. If you only want to look for, say, time where it actually equals 60 minutes, you only want to look for 60-minute periods of times. Then you can specify this and be a little bit more selective in terms of times that you're looking for there. I personally think that keeping it on the overall, looking at the greatest potential amount of periods of time is the best display setting for us, so that's what we're going to keep it on right now. Let me just give you a demonstration of what we look at here. If I say I only want to look at 30-minute periods, okay, when this displays, I'm only going to have lengths of time that are 30 minutes in length. And you can always look over here on the left to see what those lengths of time are. 25 to 55, 20 to 50, 30 to 7, 920 to 950. These are all 30 minutes in length, okay? If I go ahead and change that back now to say less than or equal to 60 minutes, and I calculate it, we're going to have all different lengths. So you can see that this one here is a 10-minute period. This one here is a 20-minute period. This one here is an hour-long period. So we have all different types of periods that we're searched for. Time zones, very straightforward. Pacific, Mountain, Central, and Eastern. This allows you to display the time of the session in your specific time zone. For example, I'm in Pacific. If I plot this, you can see that the crude oil market's time zone, its session is from 5 o'clock to 10:30 my time in Pacific here, and that's where it's stated right here, Pacific. If I go back and set this, say, to East Coast time zone, which most people are accustomed to, I guess, for certain markets, especially depending on where the exchanges are, you can see that the session time has now changed from 8 o'clock to 13:30, 1:30 Eastern time. The look-back period is a very, very important parameter. It affects the market's analysis very much. The number of days to analyze is specified here. You can analyze anything from 3 days all the way up to 21 days, okay? In a later video series, we'll talk about how I interpret things, and that'll be from 7 days, 5 days, 3 days as well. I like to look at stuff. We'll keep it at 7 days right now, just so that you know the more days that you look at will show a bigger overall trends, and the less days will show newer trends as well as shifting trends. So it's important to keep that in mind. When we plot the 7 days, what we're going to do is we're going to take a look at one of these bars. I'm going to click on this particular bar here. All right. When I click on it, it brings up a detailed window of what this bar represents. Okay. This is a blue on the top. It's a blue bar. Blue means buy, red means sell. Okay. That means if we entered the market at 9:10 and got out at 9:50 every day for the past 7 days, see the green results? That means that the market moved higher from 9:10 to 9:50 every single day for the past 7 days. That'd be an indication going forward that during the time period of 9:10 to 9:50, those 40 minutes there, that maybe tomorrow the potential for the market to move in that direction is there. Okay, it has a detailed market description here of what the market is, the number of days of the look back, what is the average gain or loss based on that particular period of time, and what is the win-loss ratio. In this case, since they've all moved higher during those periods there, it's set at 100%. No guarantees that obviously this will get that in the future, but that is part of what we're looking at here in the analysis. So, also shows you what the total P&L would have been for the entire period of time. And close this, we can click on another one of these windows. Let's click on this little sell window here, and we can say that, okay, here's one of these sell windows. Red is sell, right? 7:50 to 8:10, 20-minute time period here. If you sold at 7:50 and got out at 8:10 for the last 7 days, that would have worked 6 of the last 7 days. There was one day when it didn't work, okay? And you can see that one right here. That's why the win-loss ratio is set at this value, because 6 out of the last 7 equates to this. You can see the total number of profitability that we would have, that could have been gained during that period there as well. Finally, you have the ability to set commission and slippage. You can do this to get more of a real-world example of how did those trades actually perform. And if you have a market that has greater slippage, you can always put that factor into there. Okay? When you set the slippage, it is the number of ticks or pips on a round turn basis. Okay? And the commission is also based on round turns. If you're in the Forex markets, commission, even if you put a number in there, it is ignored. Slippage is the only factor that will be used on Forex markets. In futures markets, it looks at both commission and slippage. So it's important to look at those values when you're setting it there. Thanks for watching. This is Miles Dunbar, the developer of the Trader's Clock. I hope this was helpful for you, and I want you to look forward to more videos that show how to use the Trader's Clock and how to interpret the results. They'll be coming soon. Thank you.